morning. Today is Tuesday, June the 20th. The time right now in Singapore is 6:38 in the morning, and overnight we have the US market being closed for the Juneteenth holiday. And today is practically the start of a brand new week as far as trading is concerned. Today, I'm going to spend a bit of time talking about the sterling. The sterling, of course, is the British pound, and we have seen the British pound has been rallying strongly over the last few weeks, largely because inflation is resurging, and many are expecting the Bank of England to step on the accelerator, basically to hike interest rates further. This week, we have on Thursday, the Bank of England basically going to deliberate whether they're not to hike interest rate by another quarter point. And this is on the back of last week, we have the ECB hiking interest rate by quarter point. We also have the Bank of Canada as well as the Reserve Bank of Australia the week before also hiking interest by another quarter point, basically on evidence that inflation in those countries are coming back up. So that has put pressure on the Bank of England to actually hike rates again when they meet on Thursday. Now, tomorrow we have the Consumer Price Index for the UK, and everybody is having their eyes glued onto the numbers as to whether there will be more evidence of a resurgent inflation in the UK, which will prompt the Bank of England to further hike rates. Now, this will actually cause the British pound to trade higher relative to the dollar, because we all know the Federal Reserve actually paused its interest rates hike last week. So that means as the US central bank pauses its rate, other central banks are hiking rates, in particularly the Bank of England, that will tear the exchange rate in favor of the British pound. So in this case, there is going to be a extension of this rise that we see all the way from March, from early part of June. You can see that the market now is pulling back from a high of 128.45 thereabouts. And if the market do pull back a little bit more, ideally to 126.70 to 127.40 levels, that will complete this very marginal pullback here, because this market here is looking to have a five-way structure. And if this is a five-way structure, we should have another leg that will trade beyond 125.50 levels, ideally to 130 levels. So do watch out for this extended move here in the sterling. So this is all I have for you for this morning. Tomorrow I come back with another update. Bye-bye. Take care.